This is the Skin in the Game VC podcast, hosted by Tom Wallace, entrepreneur turned venture capitalist and the managing partner at Florida Funders, along with Saxon Baum, general partner and head of investor relations at Florida Funders. You'll learn from the best about investing in early stage tech companies, so you too can gain the confidence and find the tools that help you succeed as an angel investor. Are you ready to get some skin in the game?
Hello and welcome to another edition of Skin in the Game podcast. I am here with Saxon Baum, one of my partners at Florida Funders. Welcome, Saxon.
Tom, how we doing? Great to be here as always.
Yeah, excited for our guest today. We'll get to him shortly, but we wanted to, spend some time just chatting on what's going on in the tech world and kick some things around with the audience, what we're seeing out there, what's new and exciting.
Always something new and exciting.
Yeah, always something. That's what we love about tech, right? So I could kick it off with NVIDIA now being the most valuable company on the planet, surpassing Microsoft and Apple, over $1 trillion valuation, or $3
trillion, right?
$3 trillion, yeah. And I don't know, is Jensen Huang now he's got to be one of the wealthiest guys on the planet. Maybe he'll overtake Elon. I don't know what's with those motorcycle jackets.
He loves those leather jackets.
Does he ride a motorcycle? I don't even know.
I have no idea.
I know, but it got a hell of a company.
It works for him, right?
Yeah, and I guess, is it an AI bubble? We had Kathy Wood at our investor summit back. When was that? February,
yeah, late February.
And we asked her about NVIDIA stock. She wasn't very bullish on it. So obviously Kathy didn't get this one right, but nobody gets all of them right. But
and it's got to be probably 3x since then. Maybe not that much, but it's got to be at least 2.
But I remember her saying her team looks at can that stock achieve 15% annual compounded returns over 10 years, and they didn't think it could from the price it was at there.
Yeah.
I think it's done it. But maybe it's an AI bubble. I don't know.
I don't know. I mean, you have to look at the whole AI market and the infrastructure of these AI companies, and NVIDIA is powering essentially everything. So even if it is a bubble, which companies might be overvalued, I don't think NVIDIA is going anywhere. Now, will there be competitors like ARM that are probably cheaper? I don't think the quality of product from what I've read is anywhere close to NVIDIA. That might be the case. So there might be some incumbents that really, push forward. But I think NVIDIA is here to stay.
Yeah, I don't think anybody questions that. There's going to be competition. I mean, Google's working on their own AI chip, as is Apple, as is Amazon. Everybody says they're going to. I don't know, but I think even Zuckerberg says he's going to do it. But that's a hard game to play catch up on. It takes years and years. So good for him, and it's exciting. And the AI revolution. I mean, I don't think anybody within tech thinks this is a fad or anything. I mean, people thought the internet was a bubble and fad. And it was a bubble, but it wasn't a fad.
Yeah.
I mean, it got overpriced for a while, but it was the real deal. So I think AI, we all agree, is the same.
Yeah, I couldn't agree more. And the thing that, going back to NVIDIA, probably 2 years ago, a year and a half ago, every presentation that we were seeing was now .ai. These founders were figuring out a way to put AI in the deck, in the title, on the website, so that they could achieve these higher valuations, just like we saw with blockchain, 4 or 5 years ago. Now we're starting to see with NVIDIA, I've seen several different chip startups. It says we're going to be like this, like NVIDIA. We're going to be faster than NVIDIA. So now you're starting to see these companies using NVIDIA as its own sort of category in the chip manufacturing world. So I thought that was really interesting, saying, we're the next NVIDIA. We're going to be better than NVIDIA, sort of like we saw with AI and we saw with blockchain, trying to get that higher valuation.
Yeah. Well, good luck with that.
Yeah, right?
I wouldn't want to be doing that. A couple other things thought we'd talk about. ChatGPT now has 4.0 out, not 0, not 4.0, which is the way we released it. 4.0 for omni-channel. Any thoughts around what we're seeing there, and what's your?
I mean, just as a daily user, the speed of response is 10 times faster than before. Accuracy seems to be much better, but that's just my sort of day-to-day what I see. But the speed is tremendous. I haven't really tested the voice product. I know you're a big voice-to-text user. Have you tested the voice product?
A little bit, yeah. I mean, it's definitely better than Siri, but that bar is pretty low. Yeah, it seems to be fairly good. And Apple made an announcement that they're going to be working with ChatGPT. Maybe they'll finally fix Siri. God help us. I saw a demo where they were doing the translation thing.
I saw that.
Between English and an English-speaking person, an Italian-speaking person, and wow, that was pretty impressive.
That was really impressive.
And it was quick.
Yeah, it was really, it was basically zero latency from what I could tell.
Yeah, and Sam Altman's talked a lot about latency is a big issue. And I don't know if it's 10 times faster, but it's definitely faster. But they're going to keep working on that, and that gets into the whole energy consumption around. My understanding is a ChatGPT search or even a Gemini search now takes 10 times the amount of energy that a Google search takes. But on that front, too, I mean, Google now has incorporated Gemini into, as you know, into Google. And it's right at the search bar and right at the top there. And now we're using it inside of Google, Google
Gmail,
Docs and Gmail.
Yeah,
and
everything.
I'm playing a lot more with Gemini now than ChatGPT.
Yeah, me as well, because it's rating your user interface, everything that you're doing. You don't need to go to another system.
And my understanding is that, insiders, it's not, I don't think official because nobody knows except for the people inside of ChatGPT, but they're really stalled at like 140 million users. They got there really fast, but now, so did Threads. Remember, Threads got to like 100 million users and then nothing. And so it'll be interesting to see if ChatGPT really focuses on B2C and, kind of this where they've gone down this path, or they move more to a B2B company, or they just rely on Microsoft to do that, the whole B2B side. And as we know, Microsoft owns a big chunk of ChatGPT.
Well, and just like to your point, how Gemini, it's a Google product, of course, but now you're seeing on all of your Google platforms, Gemini is there. So does Microsoft start to do that with ChatGPT, where when you're on Word and when you're on PowerPoint, you now have all of that AI just directly built in via OpenAI.
Yeah, you would think so. I have to say already, and I'm a paid user of ChatGPT, so I don't do it for free. I get the latest version, the fastest version. I was going back and forth between ChatGPT and Google searches, and just and frankly using ChatGPT more frequently now. It's right there at Google. I just go to Google, and I'm finding myself using ChatGPT less. So
yeah, me as well. No, absolutely. The one thing, Tom, you're a big voice user, voice to text. We just made an investment at Florida Funders in the voice space called Open Home, and one of the major themes I think that we're excited about is getting away from the screen. My generation, and even more so the generation one younger than me, so that would be Gen Y, they grew up with a screen in their face. And it's so obvious that these screens are not good for you. You can't constantly be on these screens. What are your thoughts about the theory of maybe the next evolution of technology and the next evolution of AI, since there is getting away from the screen?
Yeah, I don't know that we ever completely get away from screens just because we're all so visual. And, when you look at photos and video, I mean, that's going to be on a screen unless you're wearing glasses around. And that's still a screen, I would argue. But I definitely think natural language processing and NLP is finally getting there. And I do it because I'm a very good typer on a keyboard personally, but I'm not a great typer on a phone. So like you guys go like crazy. I mean, I'm okay, but I just find it easier if I can say, hey, Siri, blah, 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 I need directions to, Amalie Arena. I'd rather just say it. Hey, I'm driving. So that's another reason to say it. But, I just find it easier, or even to say, hey, Siri, call Saxon. Oh, yeah.
You might be calling me as we're talking.
Siri's listening. Don't even get me going on our phone's listening in on our conversations. But, so, what did you think? I mean, the big thing, this past week was the whole Apple Developers Conference, and everybody was anticipating their announcements around AI because they seem to be a little bit of a laggard here. Were you impressed by what you heard there, or what you?
Yeah, I mean, I feel as though the innovation from Apple has been weak over the last decade. I mean, post Jobs, obviously the company has done extremely well. The stock has performed great, and I think Tim Cook has done a great job running the business. But from a net new product and innovation standpoint, I still don't get that quantum leap every time I watch a WWDC. I thought it was really interesting what they're doing now with AI and implementing into all their devices and how they're going to do that. But I feel like that's sort of table stakes at this point. What are your thoughts?
You would think. Obviously, it's not the innovative company that Steve Jobs ran. They put a lot into these vision glasses. They announced now that, I don't know if you saw this announcement, it was in yesterday's Wall Street Journal, that they announced that the next generation of vision glasses that they were working on, they're kind of scaling back and moving it to trying to make it a lot more affordable instead of keeping it very high end and more enterprise focused or more business focused. So, that's been their big bet. I mean, it was kind of like, with Zuckerberg with Meta and Reality Labs and all the billions he invested in that. And if they would, I can't help but wonder if they were in same thing with Zuck, if they were putting all that money in AI instead of in Meta and virtual reality and augmented reality.
Yeah, would that have suited them better, in the long run?
Yeah, and Apple also announced they're completely, I don't know when they announced, a few months ago, they're completely out of the car business. They're not going to do a car, so we don't, that's probably a smart move on their part. But yeah, I mean, I don't know. I don't see us getting completely away from screens, and I don't see Apple at risk here. I mean, I think they can move using other people's technology, again, whether it be ChatGPT,
hey guys,
whether it be anything else. Then, our guest is with us. Hey, Zaid, good morning.
Are we muted? No, you're muted. Okay, no worries.
You guys there?
Yeah. Yeah, just let me tell him. Hey, what's up? How are you?
Great. You hear me?
Give us 2 seconds. We're going to wrap up this convo. I'll introduce you, and then we will get going.
Perfect.
Sweet.
All right. So, I just finishing up on that thought. I don't think we're going to get completely away from that. Two other things we wanted to touch on real quick, and our guest is here. So, we don't have to do it now. We can. You were going to mention Jake Paul and.
So we had some news about 2 weeks ago that the Jake Paul fight with Mike Tyson was getting delayed and pushed until some point later this year. We had news 2 days ago that Jake will now be fighting another opponent here in Tampa, Tom and I's town, on July 20th. So we will be there. The Florida Funders team will be there. I think Jake should win this fight, but who knows? Anything can happen.
And for those who don't know, Jake is a co-founder in a company called Better that we're an investor in. So that's our interest in this.
We're very aligned with Jake. And usually we try to de-risk some of our investments. This one, I don't think everything hinges on his professional boxing career, but hey, it helps when he wins. That's for sure.
Yeah, definitely gets good exposure for Better. So, and then, the only last thing we were going to mention was NIL and where that's all going in tech and sports. And we have keen interest in sports and sports technology and investing, and we're watching that very closely. We have Florida Funders an investment in an NIL company called NoCap, and we're still thinking there's lots of opportunities there. And this whole announcement, I don't know if anybody saw the Wall Street Journal article, which featured Drew Weatherford, which is a very close friend of the firms and Sachs and I's, and what Weatherford Capital is doing in the sports world and investing. And it's going to be really exciting. I mean, a lot of people are scared by NIL and the portal and all that, especially college sports. We see it as an opportunity and very exciting.
Hey, anytime there's a seismic shift or a change, we know technology is going to be a part of that disruption. So excited to see what happens with NIL. And it's really just the first inning of all of this. It was a wild, wild west for the last, 2 or so years. Seems like it's being a little bit more institutionalized with some rules and regs. But the jury's still out on that.
Yep. Well, the NCAA creates a lot of their own problems and seems to be a bureaucratic organization that doesn't do anything very quickly. And
Yep.
so anyway, but
Always.
yeah, it'll be exciting to watch. All right. Well, with that, we are going to get started with today's podcast, and we're super excited with our guests we have today. And Sax, why don't I let you kick things off?
Yeah, absolutely. So we have an amazing guest today, Zaid Rahman, who is the CEO of Flex. Flex is a portfolio company of Florida funders. We've been working with Zaid for about 2 years now. I will say at this point, it is the fastest growing portfolio company in the Florida funders portfolio from a revenue standpoint. Zaid, thank you for being here. How are you?
I am great. How are you?
Good. We've got a funny story here. We tried to do this podcast about a month ago, and Zaid was on a trip up in New York visiting some customers, and we had some internet issues. So we got to reschedule. Tom is here this time. He wasn't here last time. And so we're just so happy to have you here today, man. And thanks for doing it.
Yeah, this is awesome. Yeah, I get Tom and Saxon. So.
It's very rare that you get the two of us together.
Yeah, I don't know if that's a good thing or bad thing.
Stop saying it's good. Stop saying it's bad. But no, we appreciate you taking the time, and we're going to see you in Tampa tomorrow for a great event that we're hosting. But hey, why don't you tell us a little bit about yourself, Zaid, a little bit about your backstory, maybe getting us up to Flex, where you're at now, and then we'll get into Flex and, the great things that you're doing there.
Yeah, sure. Thank you again for having me on. So the quick kind of background is I'm Indian originally. I grew up in Dubai. And moved to the US to initially come to college, but I got into a program called the Thiel Fellowship, where Peter Thiel pays you to drop out of college. So I ended up doing that instead, and basically started a career in entrepreneurship.
Where were you in college at, Zaid?
So I was supposed to go to Columbia, but I took a gap year and basically never went. So I suppose New York. And so
you saved some tuition money there. I'm sure Columbia is not cheap.
I would agree with that. My parents, actually my mother, who's super Indian, still wants me to go back to college, right? And so,
Mom knows best. No, I'm kidding.
Yeah. In this context, maybe not. Love you, Mom. Started a company. The first company I started was in the education software space, which was sort of helping schools to digitize content. And that company got acquired by a PE fund, so I was lucky with that. And so spun out from there and started another company, which was an education AI business. The AI business was, in many ways trying to build ChatGPT, because our sort of thesis was computers should understand knowledge and then teach you that knowledge, right? And so from that perspective, I think we were kind of an early version of an LLM startup, circa 2015. And that company, we're one of the first companies to have built enterprise summarization. And so we sold that to lots of large companies. And so our biggest customer and investor was JP Morgan, and then they took over the business. And so that was sort of a kind of a great learning experience. Frankly, it wasn't as successful as it should have been because it was way ahead of its time. And at the time, I remember venture capitalists would often say, what the F is this, right? So don't understand it. But in hindsight, we were sort of directionally right.
Early.
But Jamie Dimon got it.
Yeah,
exactly. And some other very smart people in the enterprise. And so from there, took some time off, was sort of investing all along the way. A lot of great friends in San Francisco, built a lot of great companies. So it was early Robinhood, DigitalOcean, Rubrik, and a few other companies like that. And so that kind of started a career in sort of becoming kind of a super angel, if you will. And so me and another Florida Funders portfolio company founder, Joey Levy, and I started a little angel fund when we moved to Miami in COVID. And the fund is called 305 Ventures, and started investing a lot more from that. But was really itching to start another company. And I'd been thinking about finance for a very long time. And really the common denominator across all my kind of entrepreneurial experiences and seeing my family run their sort of a small business was that the common denominator was finance sucked. right? And so, so from that point of view, thought that there was a huge opportunity in that space, and so now I'm building Flex.
So I want to go back to SF to Miami. Why did you choose Miami? And full disclosure, I will say this. Zaid has brought probably more people to Miami from SF. There's only one other person that's probably brought more, and that's Mayor Suarez. When you meet somebody in Miami from the tech world, how did you get here? Zaid Rahman. Why Miami? Why did you choose Miami?
Yeah, it's actually funny. That stat is actually like, I know you meant it as a joke, but it's actually, I think, probably true. Besides obviously Keith Raboy and Delian, have been quietly sort of running a lot of community events, and so I think the number, I did the tally in my head, it's like close to 100 people who have moved from New York to SF, partially because of some of the dinners we organized. And so that was a cool experience.
It's amazing.
Really kind of the thought process there is, I was in San Francisco. I was there for about 7 or 8 years. And I was really, actually, my friends will tell you that the day I landed in San Francisco, literally from that day, people have heard me say that, San Francisco infrastructure is terrible, right? And at the time, it was not a very well talked about subject. Today, it's actually like a really popular thing to say that, San Francisco kind of sucks from an infrastructure standpoint and a governance standpoint. But, I love the people from San Francisco, the government, perhaps not the best. But, so I had been thinking about moving away from that city for a very long time. And in COVID, I almost moved to Los Angeles, almost bought a place. I don't think you know the story. I almost bought a place in Los Angeles. And then I came to Miami for a couple of weeks just to take a vacation. And
we were the only place open.
Yeah. I mean, literally the reason why I came in 2020 was because someone told me that COVID doesn't exist in Miami.
Fair statement.
I was like, all right, that sounds great. So I came out here, and, the plan was to just stay for like a week or two. And I kept extending my Airbnb. The 2-week stay ended up being 3 months, 6 months. And then at that point, I was like, I should just move here. The way I describe it is that the experience that Miami had in late 2020, early 21 was that imagine putting your most interesting friends in a school bus and shipping them somewhere. And those people happen to have landed in Miami. So
have most of those people stayed in Miami?
I think some people there's, in tech, if you go on X/Twitter, people will say like, oh, Miami people are like coming back to San Francisco or New York. I think that's partially true because, AI companies are, a lot more in San Francisco. So founders who were really interested in AI ended up moving back to San Francisco. But for the large part, I'd say like most of my Miami friends are still here. And so the churn rate is much lower than what's talked about.
Got to use the SaaS metric there, right? The churn rate.
Yeah, I think the net dollar retention is very high.
And what, besides, we were open when everybody else was closed, what surprised you about Miami when you got here that you kept liking it more and decided to stay, and as many of your friends did?
I think the context there is actually very personal. So, I obviously grew up in Dubai. Dubai is like one of these places where, literally the ruler of Dubai calls himself the CEO of Dubai Incorporated. And the first value of Dubai is a can-do attitude. That's something that he says all the time. And so in some ways, when I came to Miami, it reminded me of the same can-do attitude that Dubai has, except based in the United States of America, with the American infrastructure, the capital markets being within reach, and sort of all the kind of great things that America is known for, and this sort of like emerging market sort of we can do anything we want vibe. So a combination of these things was really, really interesting. And I actually have a saying I tell some of my SF friends. The average people I meet in Miami, especially in kind of our circles around tech and finance and so on, tend to be actually smarter than the average person you will meet in San Francisco. And this is sort of a controversial thing to say, but yeah, which is kind of an aggressive thing to say, but I'll explain what I mean by that. So obviously, like San Francisco, New York, et cetera, have incredible people. Top 1% of the kind of industry is still there. But if you pick up, let's say, a pebble, and you throw it at someone in San Francisco, you're sitting in Blue Bottle Coffee, which is the most popular coffee shop in San Francisco, and you throw it at someone at Blue Bottle, they're most likely some PM at Google. Right. And so the average person in San Francisco tends to be sort of, just another big company employee, just another sort of, big university grad. Right. And so what ends up happening is that there's a lot of the culture becomes very homogenous. And so all the thought process is literally the same across the board. And so that can be quite challenging if you're trying to be unique or different.
Yeah, we actually look at the venture capital world that way. And if you look at the venture capital world, the epicenter is arguably, Silicon Valley and Sand Hill Road and all that. And we tend to think those guys are the same way. They're all lemmings. They all think the same. They all do the same, Andreessen Horowitz leads, and maybe Kleiner Perkins and everybody else kind of whatever they're investing in, we're going to invest in. And so it's a lot of that, and you use the word homogenous, not out of the box thinking. And so we kind of look at that.
Yeah, I mean, we always say we feel
not totally true. I mean, if you go in South Park, if you went to South Park in San Francisco in 2019, you would see, VCs having, walk and talk meetings with some of their portfolio founders. And when you would see that happen, other VC offices happen to be in the same area, Andreessen and Redpoint and Bain, or pretty much all these folks were kind of in the same spot in South Park in 2019. Now they're migrating to Jackson Square in San Francisco. And if a VC would see another competing VC with the founder, they would start kind of hounding them with cold emails and outbound LinkedIn messages and so on. So it was just like a very kind of comical kind of time.
That's funny. Let's get into Flex. So Flex is the company now you've been running for about 3 years or so. Florida Funders is an investor in this business. We were an early investor. We have since invested twice. We have a board seat. We're very involved in the company. And as I said, it's a company that we're very keen on. So tell us a little bit about Flex and give us a rundown.
Yeah, no. So, as I kind of mentioned earlier, have built a couple of companies. And so have seen up close how hard it is to run a business. And running a business is super, super hard, right? As an entrepreneur, you're thinking about so many different things. And, I think most founders will tell you that, the common problem that they often are facing is that their finance orgs are not the best, right? And there are kind of two elements there. The back office, first of all, is highly cumbersome and fragmented. You have 15 different workflows. Each workflow is a different piecemeal solution. Each piecemeal solution is a different billion-dollar company, right? And so the first question that we asked was, why hasn't anyone built a compound startup to bring all of these different pieces together into one single solution, right? The other element is working capital. Well, it turns out working capital is still not a solved problem, right? If you're sort of in the sort of venture capital world and you're raised a lot of venture money, then it might be a little bit of a different experience. There are companies that serve venture-backed startups. But if you're a small to medium-sized business, it is actually quite hard still to get working capital. And, increasingly we have found sort of a no man's land, if you will. These are companies that are doing as low as, let's say, 2 million in revenue, and maybe even as high as 100 million in revenue. Which we like to describe as sort of the lower mid-market or upper mid-market, where, they're sort of too big for a charge card that a Capital One or an Amex gives them, but they're still too small for what a large bank like a JP Morgan would give them from a line of credit perspective. And so we realized that there's a huge opportunity to serve these sort of very sort of credit-worthy customers oftentimes run by fairly affluent individuals because their businesses are generating cash flow, but they have struggles kind of on a day-to-day basis from a finance perspective. And so what we have built is a finance platform that brings all the pieces of financial services and financial software into a singular solution. And so we have launched, a credit card product, a bank account product. We've recently launched an expense and spend management product, and an AR and AP automation system. And now you can even sort of finance your AP using Flex, sort of all in kind of one sort of singular solution. The Trojan horse that has allowed us to penetrate these companies quickly is our corporate credit card product, which is sort of our land. There, we offer you net 60 terms on every single purchase. So you get 2 months of free float on every single transaction. So imagine you're a construction business. You need to buy materials from Home Depot. You need to spend $100,000. Your client will pay you in 2 months. Well, who's floating you for 2 months, right? Enter Flex. And so in that context, we are the cheapest source of capital. And then, from there, customers often will adopt these sort of second or third products that we have. And so, launched about a year ago, doing really well.
I have a question,
it's been a while, right?
on your solutions. So when I think about that, would you call it the upper side of the small market or the lower side of the medium market, that 2 million to 100 million, that it's, a lot of that's, those are QuickBook customers, right?
Yeah.
Especially under 20 million or whatever.
Yep.
Do you replace QuickBooks? Do you integrate with QuickBooks, or maybe NetSuite's too in the higher end of the market? How do you look at that?
Yeah, we have integrations with QuickBooks, NetSuite, Xero, Sage, a bunch of these accounting platforms. So the way we think about it is that what QuickBooks and NetSuite are really good at is being the accounting ledger for the business, right? And so oftentimes it's quite hard to switch that accounting ledger, given that the CPAs and whatnot are kind of deep in that system. However, as a business owner, right, you need to sort of think about working capital. You need to think about banking needs. You need to think about money movement. You need to send wires and ACH. You need to sort of pay your vendors, so bill pay. You need to sort of send an invoice. And so those tools, historically, a lot of these sort of fintech companies build it for those CPAs and kind of finance teams. We think that there's a huge opportunity to build for the business owner who's thinking about money movement and banking and credit and those types of things, which are kind of more P1 problems that a business owner is trying to solve for.
So when you look at the landscape of these fintech solutions, on the high end, you probably have American Express for Business. Then you have these kind of newcomers, the Brex and Ramps of the world. They're all really focused on venture-backed companies and private equity-backed companies. What's that green field that you guys have been able to identify that sort of differentiates you guys from those other players?
Yeah, no, look, I think, it's like if you think about kind of a spectrum, right? There's sort of micro businesses on one hand that are, solopreneurs, single person, sole prop type things. Then there are sort of companies that are kind of the types of companies we mostly work with. They're doing in the bell curve, and companies are doing 20, 30, 40 million in revenue. Then you have companies that are much more on the enterprise scale. They're like hundreds of millions in revenue, if not billions of dollars in revenue, right? We have found that the retail bank, so Capital One, Amex, Pays, Citi, et cetera, are really focused on the micro business because that's sort of very close to their consumer business, right? And so that space, we have a few kind of fintech serving it, amazing companies like Bluevine and Cabbage and Found, which is another sort of startup in that space that kind of serve that micro business segment. On the enterprise side, we have seen, incumbents like JP Morgan and Goldman and, BFA Corporate, et cetera, serving those guys. And you see stuff like SAP Concur, there's Navan, there's Ramp, increasingly serving kind of those segments. And you've probably seen kind of in the market, Brex has sort of pivoted increasingly to larger companies, serving increasingly large Fortune 500 businesses. And so, Brex often will tout that, they won DoorDash as a customer. The use case of DoorDash is so different than the use case of the type of business that we go after, which are, 40, 50 person companies, oftentimes not venture backed, oftentimes bootstrapped. And so the cash flow dynamics are quite different. And even underwriting them is quite different, where you're not only underwriting the amount of cash they have, but you truly have to understand their cash flow, right? And so the Ramps and Brex of the world, because they serve cash-rich companies or enterprises, they're basically basing their credit limits based on cash on hand. So for example, let's say you have $1 million in the bank, they'll give you, let's say, $100,000 limit, which is great if you have raised a venture capital round. But if you're sort of a HVAC business doing $40 million a year in Tampa, right? You're not keeping cash in a corporate bank account. You're distributing that out. And so how do you understand the dynamics of that money movement is quite complicated, which is what we have specialized in.
Got it. One thing Tom and I have been impressed with from the get-go with the business is the talent you've been able to attract and surround yourself with. Can you talk a little bit about how you've been able to attract that talent? Now you've raised, some capital, but beforehand, essentially on a shoestring budget, getting talent from American Express, from Cabbage. How were you able to recruit these individuals?
Yeah, no, I think the biggest learning I had from the San Francisco days is really, the Vinod Khosla saying, the team you build is the company you build, right? And there's a huge difference between a $0 million company and a $0 billion company, right? And so in many ways, talent is really the kind of core thing that sort of differentiates a company. And so honestly, the kind of first step in recruiting good talent is actually understanding what is good talent. Because it's not just a resume. It's not just that, such and such person was at a large company. It's going deeper than that and understanding kind of the character and sort of the culture fit, if you will, of that individual to be part of an early stage story. And so honestly, it's just a matter of reps. And so, even today I have, 6 recruiting calls, right? And so I think I spend probably 30 to 40% of my time interviewing people. I have sort of a strict kind of policy that we don't hire anybody without me kind of interviewing them, which is, can be a little bit of a bottleneck sometimes from a process perspective, but has been awesome to sort of have kind of consistency across the board. And if you do it long enough, you start picking up on a lot of signals. And how you source these candidates.
How many FTEs do you have right now, Zaid?
We're just under 50.
Okay. I think that's great you're doing that, by the way. You're still interviewing every single person. Personally, obviously, at some point that'll end. But one thing I was going to ask you, and sorry to interrupt you, is, you kind of mentioned the cultural part. And, bringing people in from large companies, my experience into startups doesn't really work out all that well because of that cultural difference. Have you found that to be the case as well?
I think there's some people who really want to be part of a fast-growing early-stage business. So it's, for example, we recruited an individual from Amex. They were there for 12 years, and from there they joined another large company. But they were actively seeking for the right early-stage business that was still figuring things out, that they could come in and have an outsized impact at. Because a lot of times, especially when you see a veteran in the enterprise, who's been there for 10, 15 years, 20 years in certain cases, they're itching to be part of a much more entrepreneurial kind of experience. You just got to go find them, and you have to make sure that the motivation is the right motivation. Mm-hmm. And it's not just like they're joining a hot startup or something like that.
Yeah, no, that makes sense. And one thing that we constantly see from Flex is the events that you guys are doing and the presence that you guys have around major events around the world, F1 Miami, South by Southwest in Austin. Can you talk a little bit about the customer acquisition strategy that you guys have put in place and how you think about branding and getting your name out there? And as you and I sort of talked about, striking while the iron's hot.
Yeah, no, absolutely. I think a lot of businesses, and this has been a huge kind of learning experience for us. A lot of businesses think about go to market as, okay, we're going to send, 10,000 emails and we're going to get, 0.03% response rate. And then we're going to sort of retarget them with Facebook ads. And then we're going to send them, a bottle of, something, right? And so that's sort of the constant kind of thought process that a lot of companies have. The reality is that business owners don't care, right? Like if you're a founder or running a business, you just don't have the bandwidth to care about the direct mail that you received, right? And so you have to sort of create an experience that the business owner is excited to be at, right? And so we have found that events marketing actually is a great hack. And so at Flex, we host at least 1 to 2 dinners every week or so with incredible business owners. And these dinners and sort of larger events that we do are the types of events that you want to be at, right? It's like a cool thing to be at. And you're meeting other interesting people that you end up doing business with. And so it becomes sort of like this flywheel that you end up inviting your friends to because, you feel proud to be invited to it in the first place. And so that has been, one of our cheapest kind of hacks in terms of getting a lot of brand awareness very quickly. Flex as a brand only launched in September of 2023. And in 3 quarters, we have achieved quite a lot of brand awareness, especially in the large cities like New York, LA, SF, Miami. And it's because, our event strategy is great. We've done 50 events in 2024. And the other interesting hack is that if you do it right, it'll also attract quite a lot of co-hosts and co-sponsors that oftentimes will not only split the cost, but oftentimes may even cover most of the cost of these things. And so when we do very large events, like we did a party for F1, that party was near break even, right? And so for us, we've kind of figured out a way to not only kind of get the right people in the room, but also sort of create an ecosystem of partners that are targeting similar people and are complementary to the products that we sell.
And that's been something, Tom, that's worked for us over the years. And
Absolutely.
we put together these experiences, whether it's our investor summit, which you were a speaker at 2 years ago, or it's events that we're hosting in Miami. We have this feeling of, hey, if you're a part of Florida Funders, you're going to be a part of these amazing experiences that we're hosting.
Yeah,
exactly.
And we get the co-host to help us with cover the cost too. Like, I like it. Especially if you can do these great events and not have to put out a lot of money because that's the only downside.
Yeah, no, I think more founders should look into this. If you do it the wrong way, it can be quite a large distraction. Luckily, we have a great events team. We have a great director of events. We also have partnerships folks who are constantly working with our partners. We now have I believe 40 or so partners that we do events with. And some of them are very large, publicly traded companies. Others are startups, sort of just figuring things out, and they have budget, right? And so if you do it right, and oftentimes you are rewarded if you're doing most of the work, right? And so our team does most of the work in terms of logistics and inviting people, and then we kind of tack on with our partners, and our partners do a great job of inviting their folks as well. And so it's kind of a win-win for everybody, and sort of a force multiplication.
So give us an idea of how many customers you have, how your business is growing. As Zach said, we're very excited about your growth. We haven't really shared some numbers with the audience. I think they'd be excited to hear because you just launched in September of 23, which is all of under a year ago.
Yeah, so I think without going into too many numbers, the headline number I can share is that we are on pace to do over $1.5 billion in annualized credit card volume by the end of the year, which is quite fast for having just launched a couple of quarters ago. And the reality is that we have just found that the demand for our Net 60 product is very, very high, and it sort of has enabled us to kind of enter these companies, and then our AUM on the kind of banking deposit side is growing exponentially as well as more and more sort of customers deposit funds there as they use more and more of our credit card product. And it kind of becomes a flywheel that sort of attracts people from credit to banking to money movement, and then kind of these other things that we have as well. Yeah.
How many active customers do you guys have, Zaid?
Yeah, so it's not a number we talk about publicly, but the way we think about active customers are customers that have large lines of credit and also have deposits with us, and so that's in the sort of several hundreds of customers.
Awesome.
And so you provide credit to these small businesses. As a startup yourself, how hard was it to line up a credit facility to be able to offer to your customers? And tell us about that experience.
Yeah, so we have raised $100 million in a credit facility in 2023, and we now have built out a whole capital markets team at Flex, and so there are two people that are full-time focused on raising credit and sort of having the right kind of infrastructure so we can fund our customers. And so, to be honest with you, it was an incredibly hard process to get that first facility done. And to be honest, Florida funders helped lead the Series A, and that Series A in May of 2023 really made that credit facility happen, right? And so, thank you for, I guess, seeing the vision. Because oftentimes with these credit facilities, they have minimum equity requirements, and so if you don't have enough sort of capital on the balance sheet, oftentimes they don't want to fund it. And the way these credit facilities work, for those who are not familiar, is that they tend to be facilities that are funding the assets. And so in this case, the asset is the credit card receivable that's produced when a customer swipes the Flex card, right? And so the capital is not being used to sort of fund operating costs at Flex, but purely fund the customer sort of receivables that we're generating. And there's a fairly large market for this. And so the way it works is that, a credit fund, much like a VC fund, sort of takes kind of the first bet. And so in our case, we partnered with CIM, which is sort of a fund based in San Francisco. And from there, a lot of companies will then graduate to even larger sort of credit funds, kind of like how you graduate from a seed to Series A. And then from there, you typically will graduate to a much larger, $1 billion facility with a bank. And now there's sort of a very large kind of securitization market where you can even do bond offerings. Like, for example, our peer Brex has done their, much more in the venture-backed space, where they've raised sort of a $250 million bond as sort of a public security.
Interesting.
Yeah.
So where do you see your company Flex in, say, 5 years? What's the goal here?
Yeah, so I think the opportunity, every single day, whenever we have sort of an internal conversation, it's sort of like the common denominator in these conversations that, the realization that the TAM here is just so significant, right? The gross profit generated from the financial services industry is a very large percent of the U.S. economy. It's I don't remember the exact number, but it's perhaps as high as a fifth of gross profit generated by all Fortune 500 companies comes from financial services, and fintech is still very much a small part of that, right? Less than 5% of gross profit is captured by fintech. So the opportunity is very, very large. The B2B credit card spend kind of space is over $1 trillion a year, right? And so even if we're at $1 billion mark, right, we have a lot more runway to sort of capture. It's literally 1,000x kind of amount of work to do. And so the next 5 years is all about creating this kind of ecosystem of products that our customers love. And so we can sort of become the one-stop shop for all financial needs for the mid-market business owner.
I know you want to do lightning round?
Well, one last question. Well, it's kind of two questions I was going to ask you.
Sure.
Fintech's obviously, if you go back 3 or 4 years, it was all about blockchain. and now it's all about AI. All we hear is AI. So how do you look at blockchain and how do you look at AI as they affect Flex? And, and how do you take advantage of that?
Well, on the AI front, we are actually, about to hire sort of a machine learning team. And so, my background is in AI, my last company. And so we've been thinking about this idea for a long time. There's a lot of stuff that we do that is quite operationally complex, right? So from an underwriting perspective, if you're underwriting a large line, let's say you're giving someone a $2 million line, that process is quite cumbersome still. And there's a lot of automation we can do, such that we can normalize the data that we're gathering from customers. We can analyze their transactions to give them faster decisions, as an example. When it relates to servicing, right? We have a lot of customers who will send us a customer support query in the middle of the night, something happened to their card, some fraudulent transaction, et cetera, et cetera. Well, it turns out there are quite a few agents out there that have built AI agents that can be used as a fintech to sort of automate the kind of servicing of those types of requests and make it seem like, you're talking to a human. Then there's a lot of stuff you can do from an insights perspective where you can provide better insights that, hey, we know, other companies in the HVAC space at the same kind of revenue band, and we noticed that you're spending 34% more than these other companies on payroll, right? So that's an opportunity for you as a business owner to optimize your business and so on and so forth. Yeah. So there's a lot of stuff that we can do with AI and fintech. As it relates to blockchain, that's sort of a whole other subject, I would say. And, in terms of money movement, I think there's a huge opportunity for governments at large to adopt blockchain to really optimize money movement. I mean, one kind of big frustration of ours is that we often have to sort of send large amounts of capital over the weekend. And unfortunately, the wire and ACH rails are basically switched off. And so there's this kind of arbitrary thing where, the entire sort of government money movement rail, which is pretty centralized.
Shit.
Yeah. We have seen some kind of scary situations happen. And, even in our sort of kind of operational, for operational purposes. And so, we are often talking about the fact that, this could easily be solved if there was a better ledger. And blockchain is just that. It is an incredibly good ledgering system, right? And so the government does not have a good ledger. You will be shocked when you learn how wires work. It's like literally moving, someone is going into the system, deleting a cell from one account and moving that cell to another account. It's a very kind of rudimentary system.
Oh, I'm not shocked at all. I mean, I just, the archaicness of our financial system just don't get me going. But just one simple example, I just recently deposited a sizable check into one of my banks, which is about, they're in the top 20 banks in the United States. And they put a hold on it. They were holding it for like 8 days. So now I just called my person and they took care of it right away. But in today's day and age with ACH and everything, they have the money instantly. They're holding it for 8 days. I mean, is that crazy? Yeah,
it's insane. And I think the kind of new sort of money movement innovation that's kind of a big deal is ACH will likely graduate to another network called RTP, real-time payments, and wires will graduate to FedNow. And so if you think about FedNow, you'll be able to do like Venmo-like transactions up to, I think, $1 million instantly, right? And so, and it's 24/7. There's no like wire deadline, wire cutoff, right? And so this stuff exists. I mean, other countries actually, countries like India are actually, you'll be surprised, more savvy from a financial infrastructure perspective as it relates to money movement than the United States, because the United States infra is like from the 70s, right? Yeah. And so a lot of countries skipped, 3-4 decades worth of stuff to the best possible kind of tech. So if you send money to someone in India, they'll often get it same day within a few minutes. And this is sort of an international transaction, which is kind of crazy.
Yeah.
Yep.
Yeah, good. All right, well, we're running out of time, so we like to do a lightning round at the end. So I'm going to ask you a 5 questions. Your answers should be short and quick. and it's just a fun thing we do. So first question is, as you look at AI, is over the next 5-10 years, is it a net job creator or a job destroyer?
I think over the next 30 to 50 years, for sure, a job creator. I think in the next 5 years, probably, will destroy jobs. I'm not sure, how quickly new jobs will be created, sort of in a 10-year horizon. But long term, for sure, a job creator.
Okay, price of Bitcoin. Let's look at, say, we're here 2024 June, and the 2026. What's the price of Bitcoin?
I'm definitely, given that I live in Miami, which is one of the sort of capital of crypto, I would say like price is going to go up. So I don't know, 100,000.
Oh, okay. Not that much.
Yeah,
though.
that was a conservative response there.
Okay, Tesla.
Yeah.
Does Tesla become the largest car company in the world, the largest robotic company, the largest storage company? Where do you see Tesla going?
Well, did you guys see the sort of new sort of app demo around hailing a Tesla like an Uber?
The robo-taxi? No, I didn't see it.
It's insane. First of all, like Tesla actually has great software engineers. Like I don't think that company gets enough credit for that. But yeah, so I think Tesla in 5 years will be a like next generation Uber.
So we were talking about Miami vis-a-vis San Francisco.
Yep.
I think right now Miami sits at the 6th largest tech hub, only behind San Francisco, Silicon Valley, New York, Boston, and Austin. Where do you see, so we're Miami's 6 right now. Where do you see Miami, say, in 2030 in that list?
Yeah, so I think, look, New York will always be sort of the capital hub, right? And so it'll sort of stay up there. San Francisco will still be a sort of major tech hub. I think it's first now. I would argue that it'll be first or second. Maybe New York competes with it. Los Angeles is an incredible hardware hub, right? And so I think Los Angeles number 3, and then Miami number 4.
All right.
Okay.
Like that.
Good. And the last question I have is, does Jake Paul win his fight? Who's he fighting?
Mike Tyson.
No, the one that's happening in July.
Oh, in July. Yeah.
Something
yeah.
Perry? Is it Mike Perry?
Yeah. I don't know.
You're not going to bet on that. But if you do, use better.
No, I mean, I the fact that I don't know is a sign that Jake Paul is going to win.
Yeah, exactly. That was my thought too.
All right. Well, thanks.
And he's been training hard,
Yeah, for sure.
He was preparing for like a much more complicated fight. So,
Yeah.
All right. Well, thanks. Thanks, Zaid. This has been great.
Thank you.
Really, I'm sure our audience enjoys
Absolutely.
hearing your perspective. Good luck and continued success at Flex. And we're happy to be along with you guys for the ride.
Thank you, guys. Appreciate it.
Great to see you as always, Zaid. Thanks for being here today.
See you, Zaid.
Awesome.
Thanks.
Thank you, guys.
And for our listening audience, just wrapping up, if you're a founder and you're looking for funding and interested in talking to Florida Funders about us possibly helping you out, just go out to our website, floridafunders.com. We're easy to find. And if you're an investor and you find angel investing exciting, early stage tech investing exciting, we have a lot of different options for you to get involved, both from looking at individual companies that we invest in to our funds. We would welcome your participation. Again, you can find us at floridafunders.com.
And if you love the show, which we hope you did, because we love the show, follow us on YouTube. Throw us a follow and subscribe to our channel. Thank you so much for being here today, and we will see you with the next episode of Skin in the Game Pod.
Thanks, Ax.
Thanks, Tom.
Thanks for spending your time with Skin in the Game VC today. If you want to learn more about investing in early stage tech like a venture capitalist, be sure to visit the Florida Funders website at floridafunders.com. Join our angel network at no cost and get access to Florida Funders VC vetted investment opportunities in the next great breakout tech companies.